The ongoing coronavirus pandemic has brought the focus back to our health. But it's not just your physical health that you need to look after at such a sensitive time. You also need to take care of your financial health so that it can effectively tackle any future challenges arising out of this pandemic. I have a few personal finance tips which you are likely to find very helpful. Now, because of the ongoing lockdown situation and the COVID-19 outbreak in general, most of you must have noticed a decline in your expenses. You're currently not paying for daily commutes, restaurants, movie trips, clothes shopping, etc. Some of you might have also cancelled your holiday plans. So, you must ensure this saved money is not spent on other frivolous things. This money should be instead used to boost your savings. Bigger your savings, greater will be your financial immunity. One of the best things you can do with your savings is to build or increase the size of your emergency fund. An adequate emergency fund will protect you against any uncertainty, like a sudden loss of income or a family emergency. Now, adequate may mean different things for different people, but it's desirable to have an emergency fund worth at least 6 months of your expenses. You can always increase its size to be in line with your requirements and liabilities. The other thing to do to improve your financial health would be to review your insurance cover. If you don't have a life insurance policy, you should consider getting one with a sum assured of at least 10 times your current annual income in order to protect the financial interests of your dependents if something untoward happens to you. The next thing should be to get a comprehensive health insurance plan for yourself and your dependent family members with a coverage amount of at least 5 lakh. This would protect your savings and investments if any of the insureds require hospitalization. You may also want to check whether your chosen health insurance plan covers for coronavirus treatment or not. There are a few insurers who are indeed covering for it. Many of you must have also invested your money to meet your life goals, but the economic fallout of the COVID-19 pandemic must be making some of you feel jittery. However, I would strongly recommend not to take any major decision like discontinuing an essential investment without thinking it through. Risk-averse investors should continue with their investments in small saving schemes like the PPF or bank deposits for assured returns despite the lowering of rates in recent times. And mutual fund investors should be well advised to continue with their SIPs because those can help better absorb the impact of market volatility and fetch desired returns in the long term. Some of you can also consider slightly increasing your gold investments, be it physical gold or dematerialized gold, to minimize the impact of market risks. When in doubt, consult your financial advisor. Another important thing to keep in mind: just like your doctor advises you to monitor your blood pressure, you should also make it a point to check your credit score from time to time. A 750 plus score is an indicator of good financial health and is crucial for getting better loan offers. Now, a tough situation like the current one requires a highly disciplined approach, be it your physical health or your financial health. And just like you're maintaining social distancing these days, you should also go for digital banking to prevent getting infected by the COVID-19 virus. Doing so would hold you in good stead, as the coronavirus crisis has shown that contactless and presenceless banking is the future of finance. So, keep calm, follow the government instructions, look after your health, go digital, and take the steps that I discussed to fortify your finances. Take care and stay safe.